Hey everyone, I'm Charting Man Dan with the Chart Guys, trader and technical analyst. We have a lot to check in on after some fear to end this past week, a big drop on Friday closing near the lows. We're going to check in on the major indices and sectors to see if there's a shift underway. We're going to look at some of the big runners as well, like PLTR, HIMS. We're going to talk about lessons that we can reflect upon both from a market perspective as well as an individual trader with some lessons that I learned. Let's get to the charts. Before we get into it, on Monday, going to do a public live stream starting at 9 a.m. Eastern on our YouTube channel here, where I will be going over some pre-market prep and then some stock market commentary, perhaps a trade, depending on how things shape up, but just give you some insight into what we do in the Chart Guys every day. And also, make sure and follow us on Twitter, as there's many times at Chart Guys, many times throughout the week where I'm doing little updates and videos and things on Twitter that I don't do on YouTube. So ES, and again, I'm using the futures charts because they have more clarity for me. And I've been saying this a lot recently, where you have resistance that we rejected from on both NQ and ES that is not present on SPY. If you look at SPY, we hit higher highs and new all-time highs and then rolled over, which is a little bit more tricky. You know, a bull break, no follow through into a big pullback. It's more tricky than if you're looking at the futures and saying, well, we rejected from resistance. And it also helped me personally not exit my hedges. As I've mentioned, I've been in hedges for a while as we're chopping around sideways, and I kept them on because we didn't break these futures resistances. You know, what do I care about an extra little 1 or 2% in a hedge position that is protecting me? So that's where we stand. And unfortunately, as a trader, we are sideways in this market for 3+ months, 3.5 months at this point. In both, again, the NASDAQ, S&P 500, Bitcoin's been going sideways for 3 months. So that tells me a number of things. Number one, slow down my trading while we are range bound. Again, when we are sideways, we want to be trading less. This is when you want to be trading more. Pedal to the metal, a bit more aggressive, clear trends, follow through. Here's where you slow things down. But we also know that constricting ranges tell us eventually a volatility spike is going to come again when we break this constricting range. I thought we were close to breaking it bull to open things up a little bit, but after this week, again, we are just right smack dab in the middle of it. If we look at our retracement on the S&P 500, we can see that between the extremes of the range over the last 3+ months, we're pretty much right smack dab in the middle. So this tells me that before the summer, we know summers often slow down in markets, but before the summer, we're going to get volatility when this range breaks. You know, we got March, April, 2 months. We're not going to trade sideways for another 2 months, I don't think. I think that's the less likely scenario. But we'll certainly see the direction that we break here. And another lesson that we learned this past week, again, looking at SPY, is, you know, this happens time and time again, where you see SPY just get really tight, bull grind control, volume drops off a cliff, and then it leads to volatility. And generally that volatility is to the downside. So here was an example, again, full bull control, all-time highs, grinding up. The volume is extremely low. We trade sideways a bit. There's your big volatility drop. There's plenty of examples along the way where this happens. And here was another one. And so, you know, again, I was able to, on Wednesday, say, stay on our toes, because we know, yes, we can keep grinding up in all-time highs and keep this slow bull control. But we had a couple days here where the volume in SPY was the lowest share volume, including half-day holidays, in years. That glaringly stands out as, okay, get ready for a volume spike, because you can't just trend down in volume forever. And again, the big volume spike happening here to the downside, and a big win for the bears. So lesson one, slow grind, tiny tight range, and tiny volume tells you get ready for volatility. Just stay on your toes and get ready for the possibility of a sucker punch. Again, complacency for bulls, we're in full control, and then just a move out of nowhere, seemingly out of nowhere. Number two thing to look back on this week, bounce retracement sizes. So I have a difficult time swinging bear, even in bear markets. Why? Because retracement sizes of bounces in bear markets, so I'm not saying we're in a bear market, but there's an example of this on the hourly chart. Bounce retracements are much more significant, in my opinion, than consolidation retracements in a bull uptrend. And so you get these scenarios, even like 2008, you get these big bounces where, you know what, I'm expected to sit through a 10% bounce in the entire indices while I'm trying to ride a longer term downtrend. That to me is very difficult. I can do that with a hedge position. I can sit through a 10% bounce. but not a full-on short. And that's something that maybe I need to work on. Maybe it's just sizing down, leave a runner, add it back. But same thing happened here where, the Bears showed up on Thursday, and it was most clear in the financial sector. We just dumped in XLF, and the Bears had absolute control. Look at this 5-minute, really 2-minute control. When something is trending significantly, you just ride the EMAs on whatever time frame. And here's XLF on the 2-minute time frame. Reject, 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 just for hours, rejecting. And then when we finally got over it, that was the actual hourly bounce taking place through the afternoon. But it stood out to me, notable bear control from XLF. Another thing that stood out was XLF and QQQ were dropping and at the lows of the day together. It wasn't all of our major sectors with healthcare as well, but when it's those two, which to me are the most important two sectors, financial and QQQ, which is tech and semis, when they're dropping together, it stands out. It gets our attention because the vast majority of the last 2 years, they go inverse to each other. And it's been that rotation that balances things out, which is why you'll hear me say the markets don't drop in any meaningful way unless these major sectors are dropping together. Thursday, they did. But back to my point, look at the bounce retracement. So the bounce retracement was significant. It looked like, oh, bulls are just fine, in the sense that we bounced, 60 whatever percent. That said, the good thing is we need to be looking bearish on the morning Friday. And the reason for that is we haven't confirmed an hourly uptrend. It's just a straight V-shaped bounce. We have to confirm an hourly uptrend if the bulls are going to regain their control. And so PLTR was the short that I took on Friday morning, and that went well. I'll talk more about PLTR in just a bit when we get to the individual names. I've been trading PLTR like a madman this past week. Shorted it. One thing that I did well, I did something well and I did something not well. So one thing I did well is we had a nice double bottom and a double top first thing on Friday. So we had a double bottom 107 and a double top. This is the 1-minute chart. So drop down to 107, top out at 109, hold 107 again, double top at 109, roll over. So I had an initial bear position in the 108s, and then I added to it on a bear break of 107. And that's something I want to get better at, is adding to a winner, even if it's, making my average worse, so to speak. And then, because I assumed the most likely scenario was a NASDAQ hourly higher low, because of this bounce retracement size, I figured an hourly higher low was most likely to tighten up a bit through Friday morning. I was wrong, obviously. We fell right through support. Volume was a factor in that. But because of that, I was all out, scaling out down into 105. Looked like, oh man, I did a great job. I skipped a 3% bounce. Exited all my short. But then we roll over down later in the day to 101 and 100. So essentially just missing the reload. Should have reloaded that 5-minute lower high. So a little bit of good, but definitely left a bunch of money on the table because I assumed a most likely scenario in the broader market that didn't take place. And that's just a reminder, the less likely scenario can take place. We have to protect against that. But those are the lessons that I learned in the broader market. All right, now, is this a notable shift underway? I'm viewing the S&P 500 pretty much as just a weekly equilibrium here, where we've got, and it's not picture perfect, but this is what my brain sees, our high, low, lower high, higher low, double top, and now we're heading down to this support. And so this is the most important level for me. If we break that level, it's a weekly equilibrium bear break that tells us, yeah, things are shifting, and we then zoom out and look for monthly consolidation. And we'll be testing monthly EMA 12, and that's been holding for over a year at this point. So if bears are going to prove something to us, step one, take out the weekly higher lows, because these weekly higher lows for the S&P 500 and NASDAQ have been forming since August. Higher low, higher low, higher low, just barely, double bottom there, higher low. So do we lose the higher lows or do we hold it and break this tightening range bull? We're going to get that information here early February. Well, we got 1 week. If the bears can follow through, we'll see. But again, remember the pattern we have been in where we often were getting, 3 out of the last 4 weeks, we got weakness Friday, gap down on futures Sunday night into a bounce. It happened 1, 2, 3 times in a row. It didn't happen last week. But does that happen again? Do we get, a gap down Sunday night, then we're in some short-term extremes into a bounce Monday? We'll see. But again, bigger picture, all I care about is that weekly support. And looking at the NASDAQ, it's the same deal. We got another long video ahead of us. So same deal. It's not as picture perfect in equilibrium because we broke this resistance level, but we didn't break the all-time high. Again, on NQ, it's a little bit different with the futures, but we've got these weekly higher lows, which have been our guide ever since this sucker punch big flush in August. Higher low, higher low, higher low, higher low. And we got space to work with. So it's not game over for the bulls. Essentially what I would describe, and oftentimes, I'm a commentator of the market. That's part of what I do. NASDAQ needs a 4.5% drop to break weekly support. I would describe it as bears had a hard rejection from resistance. So bears did a great job playing defense this week. Bears are not on offense. What do bears need to do to go on offense? We need to confirm a daily downtrend. So whenever we find a temporary bottom to this flush, we got to confirm the lower high and lower low, and then we got to break the weekly supports. Then the bears are going on offense, to use some sports analogies. But right now, this was just defense, and they played defense well. They rejected the price from resistance. Do they go on offense is the information we're going to get over the next 2 weeks. Semiconductors, we knew the weekly lower high was the most likely scenario on this chart. And so that's potentially shaping up. We filled this gap back to the upside on the bounce. And it's essentially a megaphone. And again, we look for a megaphone whenever we get bear break with no follow through, bull break, no follow through. When things get a little bit unclear and choppy. So here was our bull break, no follow through. I'm going to draw these a little sloppy just to save time, but essentially megaphone. But looking for a weekly lower high, very close to the low of the week, so it won't be hard to break that. And again, the only two things that happen from here, well, three things, but we could tighten up for an equilibrium through a good bit of March. We could confirm the weekly downtrend, which we'll need to see high bear volume, or we form a little higher low and break bull. We're going to be watching NVDA, of course, because of its impact. Weekly lower high, most likely scenario. Bulls are going to be looking for a little inverse head and shoulders type of pattern. It filled the gap as well. And again, inverse head and shoulders are bullish reversal patterns, but you often find them during consolidation, which can be deemed healthy. You can form an hourly bull flag and have a 5-minute inverse head and shoulders as a part of how that bull flag is forming. But again, significant size of the bounce. We got earnings coming up next week. I didn't know that. That's obviously going to be key. Thanks, TradingView. Wednesday earnings is going to have a significant impact on semiconductors. SMCI has been one of the names with great volatility. This was a tricky one. We were watching for this weekly inverse head and shoulders a while ago, but it took a month for this shoulder to finally form. Great volatility here in both directions recently. Another note I wanted to make. So as I talked about the broader market sideways, and again, we want to pump the brakes. If I was only trading the indices as a futures trader, I would be trading so much less the last 3 months. The good news is, as traders, we can be agile and go around and find the volatility. So January, I had a really good month, one of my better months of the last 12 months, because I was trading quantum volatility. And we'll talk about quantum in just a bit when we get to the individual stocks. And that allowed for me to escape the lack of volatility in the broader market, the choppy stuff, these tiny SPY days with no volume. I escaped it by seeking out the volatility. Now that quantum is tightening up as well, generally speaking, from a bigger picture perspective, we've got another wave of names that have the volatility for us. SMCI. And again, I'll talk about these names. I guess I'll do it now. HIMS. Look at this volatility in HIMS. And PLTR, as we know, headline, defense budget cut, whatever. Is that meaningful? No. I mean, maybe. What happens is you get everybody on one side of the boat. You're in a blue sky breakout. You're in euphoria. And then all it takes is a tiny little something. You need a fundamental reason generally for it to happen. The technical traders don't need a reason. They'll say, yeah, we're due for a big pullback. We're due to liquidate some over-leveraged longs. But the herd, CNBC, they need the reason to get everybody behind the move. If they really want to see things roll over, it can't just be a technical reason because all the fundamental people won't bite. But if you give the fundamental reason in addition to the technical reason, then it has more follow through. So essentially a bit of it's a long squeeze, a very small one at this point considering how much we've run. But again, you don't drop that hard that fast. It was essentially in a few hours of trading, we dropped 24%, which is obviously very significant. Yes, we've run 1,000% plus from the lows. It's been on fire. Bulls know that they have to sit through periods of more significant consolidation because you don't get those gains without these big drawdowns along the way. But great volatility. And again, I traded PLTR this past week, probably more shares than I've traded in my entire life combined prior. It hasn't been a main focus for me. Definitely kicking myself because I thought about grabbing a long-term position in the single digits, but passed up on that. But played these bounces well. Got an initial bounce, 101 to 105s real quick. Then I got the upper 90s to the low 100s. Got the short, as I mentioned. So again, I just love this volatility, double-digit percentage in both directions. And now we're going to look for a tightening range. If we hold 95.80, we're going to look for PLTR to do something like this, give us an hourly tightening range, and then we'll see the direction that breaks. TEM is another one. This was a Pelosi play. Again, just blue sky breakout on absolute fire. So from the Pelosi announcement, whatever that was, might have been not been that exact day, but 100% move. Another one, I'm kicking myself. You can always find ways to improve in the market because I had this one on some of this move and I exited it for, 10 to 15% gain, leaving another 40, 50% on the table. But again, we got earnings coming up, but here's your big pullback, 25% drop, and bounces down along the way. Here's an hourly bounce of 6%. So these individual names are volatile, but if you're seeking that volatility, here's another example of a stair step. 1, 2, 3, 4, 5, 6, 7, 8, 9 days in a row, high or low every day. You break it at 84.09. You're invalidated if we see a new high from that point. Significant follow through. So long story short, I'm watching these individual names for day trading volatility and opportunity while the indices are chopping around sideways. Obviously, Friday wasn't a choppy day. It was a bear trending day. And again, I talk about those EMA riders. Look at QQQ. There was a period where QQQ didn't confirm a 1-minute uptrend for multiple hours. After this 15-minute bear flag confirmed, we didn't confirm a 1-minute uptrend for multiple hours. That made it easy for me to say I am not attempting a bounce because bulls are not showing us anything at all. And again, when you are in a strong trend, you're just going to find a short-term EMA and ride it down. And it also works to the upside. But rejection, 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 rejections for hours. So you just say something in your head, okay, nothing changes if 5-minute EMA 12 is resistance. And then have a very clear guide. And then if it breaks over it, then something changes. But it's almost like, all right, I don't have to think until that changes. All right, so we talked about some of those individual names. PLTR, HIMS, TEM, lots of volatility. Again, watching for short-term hourly bounces and hourly lower highs, eventually a daily high or low. I guess let's get a little specific real quick because they have different setups. So HIMS, earnings, I'm not going to be interested in it at least to start this coming week. We'll see what the reaction does, but PLTR, so again, that hourly tightening range is the most likely scenario. If we break bear, we're in gap fill territory without support, and we'll be looking at weekly EMA 12, which held the last few tests on the way up. So that'll be just under $90 this coming week, and something to watch for if we break bear on PLTR. And TEM, technically we're scouting a daily high or low because anything above 52.97 is a daily high or low. But again, unfortunately, another one with earnings. I would be interested scouting this daily high or low more actively, again, if earnings were not a factor. But we'll see how the dust settles on HIMS and TEM after their earnings. All right, let's go sectors. Some more sectors here for a bit. Then we'll do a couple more individual names. Then we'll do commodities. Thanks for sticking with me. These videos are getting long. I only do them once a week. So XLF. XLF had a double top at all-time high. And you'll remember in last video, I think I said, if we're going to see what weakness in the broader market, it's going to have to be this head and shoulders. And it wasn't an ideal head and shoulders in the sense that, if this was going to be ideal from my perspective, this would have been the high, set that clear, daily lower high, and then roll over. Instead, we were very strong all week. We did double top to one penny. We fail all-time high. And then the weakness came out of nowhere. Again, the weak day on Thursday was very glaring. It was the weakest I've seen the financial sector trade in 6 weeks. And so we then broke the daily uptrend. And so it's a double top and break of daily support. So now we zoom out to the weekly. There's a 50.41 support level. And then after that, we're looking down on the weekly back towards 47.04. So there's a lot of space for this to remain a longer term uptrend. But again, clearly there's a wall now. We can just draw this wall of resistance at this little triple top and keep an eye on it. So definitely notable weakness in the financial sector. The healthcare sector was just fine for the bulls. We're watching this as a bit of an inverse head and shoulders. Weekly bounce was very significant. We haven't confirmed a weekly uptrend yet. Bulls would love for this to be the weekly high or low to then break 148.72. Have to confirm the weekly uptrend, and 148.72 is that level. And again, even, we were weak, we were red on Friday, but it was a very different day. The financial sector, or I should say the healthcare sector, was bouncing while XLF and QQQ were dropping. It doesn't offset those two more important sectors much, but definitely a little bit of comparative strength. So can the bulls confirm the daily uptrend and then the weekly uptrend to continue putting in a longer term double bottom here? IWM broke bear. As I've been saying, I haven't cared about IWM. We were just trading sideways. It's a clear daily equilibrium, breaking bear, and now we're looking down at the low of 213.97. If I was focusing as a bear or looking for hedges or anything like that, I would be interested in IWM. Clearly, it's weaker than anything that we just looked at, and it has been for months. So, if you're a bear, you're looking at IWM and things within IWM, but monthly still an uptrend. We've been holding, here's something to watch now. Okay, we've been holding monthly EMA 12 support for over a year, 14 months or whatever. If that holds, nothing changes. If that breaks, something is changing. So we watch that as a bit of a guide here and potentially coming into play. All right, so overall, again, bears from a sector and indices perspective, bears did a great job playing defense. XLF bears, ES bears, and Q bears. To go on offense, we must confirm the downtrend as a result of the next bounce and break weekly supports. Defense was played. Can we go on offense? All right, more individual names. Tesla. So Tesla rejected from daily EMA 12. We knew the daily lower high was the most likely scenario. And now, and again, I think I mentioned in the last video where there are multiple examples where we hit first daily oversold from all-time highs, and that doesn't mark the bottom. We then get some breaks that have lacked follow-through in the past. We'll drop lower and not see a ton of follow-through, but that historical analysis of Tesla and how it has played out in the past prepared me to anticipate in a swing, I'm in a long swing position, anticipate that a lower low is absolutely on the table. And so what that allowed for me to do was, my break even initially with some day trading around the day that I grabbed the position got me down to a break even of 315. And I also have been shorting Tesla a couple times just to offset things a little bit, knowing the daily lower high was the most likely scenario. So I'd say, if I'm just viewing things that all the positioning that I've done in the past week and a half, if I just view that all as one trade, I essentially have an average now down at like 305 to try and let this continue playing out. But I am going to let it play out because it's a smaller position in my IRA at this point. And we'll see. That support level's coming up. Again, the monthly high or low is the most likely scenario, but we haven't touched monthly EMA 12 yet, and we can definitely see another leg down. So just prepare for that possibility. Our new key resistance will be 367s, and we have to break that level for bulls to prove anything to us. Otherwise, it's just a continuation of the daily downtrend. And this is why when we are playing counter trend, in some extremes, I will always take a little bit off into an initial bounce to be, I'm completely in control of this trade. Even though Tesla, from the high of this bounce, has now pulled back pretty significantly, 8% drop. At no point has there been any stress or red flags or whatever. It's all been anticipated, and it's, we're in the driver's seat due to some management and some positioning. All right, on to commodities. No, more individual names first. Let's go Chinese names. Baba. Here's another one. Again, I say, I look at charts all the time. I've been looking at tens of thousands of charts over the last 15 years. And I would say that I trade and act on less than 5% of the charts that I look at. It's probably like 1% or less. And there's so much going on when I do this, bigger picture perspective that I miss tons of stuff, and that's just the way it goes. I'm always going to miss things, right? Can't be in all different sectors and all different moves. This is another one that I have a bit of, because Baba saw the setup where the monthly higher low, we were looking at this as a monthly inverse head and shoulders, saw the monthly higher low shaping up, and I just accepted I don't like swinging these Chinese names because of the overnight gaps, because they're traded on other foreign markets primarily. And so I have to accept that. But man, it went hard and fast. How quickly we go from this balancing, again, the balancing scales strategy video. This is a long-term bottom forming, and just the flip from balance between supply and demand to demand now outweighing supply significantly, and just shot straight up off of this low. That $80 level has been very key for Baba many times throughout its history. I remember $80 being key what feels like 6 years ago, and it probably was. Yeah. This $80 level back from the IPO, support, resistance, resistance, support. Anyways, straight up 80%. We know we're going to be looking for a weekly higher low. Bulls would love to see a back test of that zone that I just removed. Hold that on a weekly higher low if this move is going to continue following through. Big picture, 6-month perspective. Let's look for a likely long-term 6-month tightening range. Whenever we top out, bounce retracement at this point, significant enough, maybe not quite, but percentage-wise, significant enough for me to watch a long-term tightening range. But bulls still complete control. Earnings, positive reaction. We had K-Web obviously being dragged up by Baba a lot. It hasn't broken out yet. So let's see if K-Web acts as a bit of a laggard. But again, at this point, bulls will be watching Baba for a weekly higher low. Quantum grabbed RGTI for a weekly higher low. Was looking for it the day news came out. Google had a headline, some quantum development. That was Wednesday, I believe. So I grabbed it, took a little bit of profit on the gap up open Thursday, and then stopped out of my runner. Pretty much, it was a green trade, but overall not noteworthy. Was looking for the weekly higher low on RGTI, but obviously broader market weakness took it down a notch on Friday. Still going to look for the weekly higher low and tightening range. QBTS is clearly the lead bull in the sector now. That has been a shift over the last few weeks that has been taking place. But again, go to the 2-week time frame. What's the most likely scenario on this chart? It's a long tightening range. Again, talked about this tightening range being the most likely scenario a couple months ago, 6 weeks ago, and definitely still anticipating that's going to continue. IONQ, tightening, heading back down towards recent lows, and QUBT, some of these other names, much weaker, heading back down towards their recent lows. So QBTS, lead quantum bull. RGTI, I love the clarity of the weekly equilibrium, but no weekly higher low is set yet. QUBT, QMCO, clearly weaker names in the sector. We're going to be talking about quantum breaking its tightening weekly range sometime late spring, early summer. But for now, again, still opportunity. There's still 5 to 8% days in both directions there. So as a day trader, you still can be looking there. But again, not anything like what it used to be. Dollar. So again, this is an example of how we play the zoom out game as technical analysts. All right, dollar, bulls in complete control. Daily uptrend, every consolidation, higher low, higher low. Oh, there's a change. Daily downtrend confirmed. Great, zoom out. Soon as something resolves or changes on one time frame, you zoom out to the next time frame. So daily downtrend confirmed. Now we go to the weekly. What's the most likely scenario? Oh, we got a lot of space for a weekly higher low. I think a weekly higher low is the most likely scenario. All right, we get the weekly higher low. Now what? We're heading back towards resistance. Is this a weekly bull flag? No. Lower high set. All right, now a weekly downtrend is confirmed. Zoom out. Let's go to the monthly. Monthly consolidation is underway. We have a lot of space for a monthly higher low, anything above 115. A monthly higher low is the most likely scenario. But in the meantime, while we're watching for that eventually, we're watching the daily and weekly downtrend as our guides. And that is a top-down approach to technical analysis. And I now, in my brain, have everything that I don't trade the dollar actively. So that's now everything I need to know about the dollar. Monthly higher low most likely. Daily, weekly is a clear downtrend. And those are our short-term guides, but I keep the longer-term most likely scenario in the back of my mind so that when the daily and weekly downtrends start to shift a bit, then I know the monthly higher low is potentially shaping up. Metals, gold, a lot of people talking like, oh, gold didn't drop hard on Friday. And I guess that's noteworthy. for many people, just in terms of, is it a recession trade? Is it risk off, and we're going safe haven? For me, I'm just watching the daily uptrend. That doesn't mean a ton to me. I understand why it means something to people, but again, I'm just going off, I don't need anything in addition to the S&P 500 weekly tight range there. That's going to give me everything I need to know. But daily uptrend still intact. Daily EMA 12 has been holding for over a month. Almost 2 months. That's the guide. Again, I don't need to zoom out. When we lose the daily uptrend, when we lose daily EMA 12, I'll zoom out and I'll scout a weekly high or low. We're in a weekly stair step for the last 7 weeks in a row. Silver has been lagging. It's possible silver forms a monthly low or high. It's possible this is a monthly head and shoulders. I don't think it's the most likely scenario, but I'm aware that it is a possible scenario. As for now, we're in a daily uptrend. Daily EMA 12 can be used as well. You could draw a rising wedge here, if that's your jam. Something like that. But again, I don't need that. I just watch the daily high or lows. We lose it, we'll zoom out, we'll scout a weekly high or low. I am interested in miners. I want to see daily downtrend confirmed. I want to see if this is a cup and handle. And I look at gold and say, well, it's probably not a cup and handle because gold needs weekly consolidation. But I'm just going to keep an eye on it, because if this is a weekly bull flag, I like the setup in the sense that, this is multiple resistance tops for decades, 13 years. And so if we can form a triple top, a bull flag, and then break that, then you get power behind that move. And that reminds me of what silver did, a little bit different, but similar in the sense that silver had a long term, I guess it wasn't that long term, but this resistance zone, as soon as it was here, it was this quick little bull flag. So you got a double top, there's your triple top, quick little bull flag into breakout. This is essentially a short-term version of what's going on GDX. So it's possible that is shaping up. What do I need to see? I need to see GDX. If I'm going to make an attempt at that setup, I need GDX weekly consolidation to not exceed 40% retracement, and daily or weekly EMA 12 will be right there aligning with that over the next week or two. So I can just use the weekly EMA 12 as my guide. And I need to see a level where I say that's either the weekly high or low, or I'm wrong. I don't scale into the drop or anything like that. I wait for bulls to show me something and I say that's either the high or low, or I'm wrong. I use that low. And that's what I did on natural gas. When I entered this position, I said that's either the weekly high or low, because again, I can't use this stop loss. That's way too far away. The risk reward doesn't make sense. I have to have something closer. That's either the weekly high or low, or I'm wrong. Fortunately, I was right. But it will be the same mindset. If I don't have a support level nearby and I'm waiting for a new level to be established, that is the definitive statement that I have to make when I'm making a play off of that new level. Because many times it won't be a bull flag and they will break, and then you just stop out with a small loss. Oil, I was watching this 12-hour falling wedge on oil. It broke bull, but we failed. Again, this is why the zoom out game, right? 12-hour. All right, falling wedge, tightening up, bull break, zoom out. All right, I zoom out, and now I know that we must break 73.65 or it's still a daily downtrend. We don't do that, and it's still a daily downtrend. So it's almost like, okay, bulls got one check mark. Zoom out, this is their next check mark. They didn't get it. Just like we got our bear check mark on the indices of what we need for bears to go on offense. Write these check marks down. I'm able to just keep them all in my head because I'm looking at charts every single day. But if that's difficult for you, make those check marks and go through the week, checking them down. What do we need for a trend reversal? The cannabis sector has been trash. What do we need? All right, daily uptrend. That hasn't been checked off in 4+ months. Eventually it will. Then a weekly uptrend. Just set yourself those reminders if you need them. Nothing wrong with that. But anyways, we've got base of support being tested on oil. We know eventually a weekly high or low is most likely. It still hasn't been set yet. Lower high every single week. Well, this one wasn't by 3 pennies, but that's a double top for me. I call it a lower high every single week. So again, just stair steps. Can't suggest enough, especially in times of volatility, using stair steps. Thursday is a great example. Jumping all over the place today, but there's a lot to talk about. Look at QQQ Thursday. If you play that waterfall dump stair step, whether it's the 2-minute or the 5-minute, That then marks the low of the day. And yes, we did dip down below what that entry signal would have been. You know, you're in, you sell a third, stop under the low. If your stop's under the low, you're in for that hourly bounce. And oftentimes you will find in high volatility that stair steps mark the bottom. What was I talking about? Oil, stair step up. Lose that pattern, now essentially a stair step down. And we're still going to look for a weekly high or low, but there is no sign of it at this point. Oil or energy is stronger than oil, but potentially a weekly lower high. We had a solid bear day Friday with the rest of the market. We have a daily uptrend as our guide. If we lose the daily uptrend, the weekly lower high is set. And again, 6 weeks ago, we were looking for this equilibrium. And here it is, continuing to shape up. And we'll watch for something like that if we set this weekly lower high. Most important support, 88.32, my small bull runner from entry down here. Stop loss is under that. If this equilibrium breaks bear, I'll be out, lock in my profit. That's it. Natural gas going really well. This is a scenario where I would have anticipated a lower high and tightening range. Fortunately, considering I'm long, we just went straight up to higher highs. Not surprising to stall out here. This is the last major hurdle for me. You know, it goes up to 4. I mean, if we're going to get this whole zone, that's the whole zone. Reject, 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 reject. And we are getting into the meat of that zone now. This is why my target is in the 5s, because I'm looking to clear this resistance zone. That said, you know, if I had a larger position size or if I hadn't taken any profit at this point, definitely take a little profit at resistance just in case we reject. You know, it would certainly be logical where, what if we reject from this resistance zone and start monthly consolidation? That wouldn't shock me. Again, we haven't confirmed a monthly uptrend yet. That's going to have to happen eventually if this is a long-term bottom. And so just be aware. I mean, there's no sign of monthly consolidation. We would need to lose the daily uptrend as step 1, then we zoom out and we watch weekly EMA 12, which held that back test perfectly. But again, just be aware that eventually monthly consolidation will happen. It's just a question of, can we break this very clear battle zone before monthly consolidation has to happen. Wow, 37. Thanks for sticking with me. Man, doozy. All right. Do good things.